Ladies and gentlemen, welcome back to another exciting episode of the Breaking Bitcoin Market Update. Hopefully you guys are doing absolutely fantastic today. My name is Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. We've got a fantastic show for you guys today. We are going to be going over the on-chain fundamentals, pointing at the truth, the reality, that even though long-term holders are still showing their conviction and not moving or spending their coins at this current price level, there is just not enough demand right now, barely, to counteract just the daily selling pressure in the cryptocurrency markets. We have seen a nice little pop off of the bottom here. So these are good things. While it remains plausible that we are in a long-term accumulation period here, we will be going over all of our bases as well as going over optimal portfolio. We will be going over optimal positions. And as always, we are very proud to host the fastest online growing community of traders and investors in the cryptocurrency space. Make sure to join our free Discord, link in the description down below, to stay up to date long after the show is over. Overall, big rants, big headlines of the day, nothing massively spectacular. Altcoins are, of course, taking a larger push today. We'll see that when we get over to the crypto bubbles. Bitcoin and Ethereum both up barely 1% on the day. This last 4-day structure does look very perilous. And as I said in the previous stream, I cannot help but remember the previous bear market of 2018 when we fell from 19,000 and consolidated at that $6,000 price level before descending on that fateful November night down into the bowels of El Diablo, crashing down to 3K and forming the ultimate bottom. You know, this being bevied by very popular analysts, individuals like Michael Burry, moving out 97% of their portfolio. And I just want to state that while those are often clickbait news, flashy articles, you're never really sure what these individuals are doing. We cannot escape the fact that the macro environment has not changed whatsoever. And with the FOMC meeting, the Federal Reserve Board essentially guaranteed us that they do not care about the stock market. Their number one mandate right now, they don't care about jobs. The only thing they care about is crushing inflation back down to 2%, and that they will do whatever they need to do that. Now, the interesting thing about that is the current environment that we're at here in the United States. We are in a kind of late stage capitalistic empire period. Anybody who studied the collapse and the rise and fall of the Roman Empire will know that as we, and other empires as well, Ottoman Empire, as we get toward these late stage capitalistic empires, what happens is the ruling body often exerts outsized pressure on the financial aspect or the economy of the nation. And that's exactly what we're seeing right now. All it's going to really take is a significant change in popular sentiment or a significant change in legislative desire for us to see a shift in the Fed's mandate. As much as we'd like them, and while we do want them to be an independent entity, that's just not the reality of kind of late stage capitalistic empire. So these things can, of course, turn and change on a dime, and we do need to be prepared for that. But again, as traders, most important thing is managing risk. So without further ado, I want to get into the charts. As always, if you have any questions or chart requests, make sure to drop them in the chat. You know, I apologize. We have been doing these very brief streams, but I've just been doing so much lately. A couple announcements before we begin. The premium member onboarding course on the Cracking Cryptocurrency website is officially done. I just uploaded the final quiz today. So if you guys are new members to the premium trading group and you're not sure if you're getting all of the features that your subscription entitles, or if you're a member, if you've been a member for a while and you're, again, not sure if you're getting all the features that your subscription entitles you to, make sure to check out that onboarding course. It will run you through all of the services, all of the products and features that you will get with a subscription to the premium trading group, exactly how to utilize them and best practices. There are quizzes along the way to keep you sharp. The next course I'm going to be working on and uploading to the website is, of course, going to be our risk management module. That's going to be completed over the course of the next month. And I am currently working on our new automated strategy, which I will be showcasing a little bit over the next few weeks. I will not be online for the next 4 days. I am taking my last vacation of the year. So I'm eager to be back with you guys. The next Breaking Bitcoin Market Update will be on Monday. So if you guys can please not move the markets until I get back, because I would really not like to have to climb up a mountain just so I can get some signal and rebalance my portfolio as I'm out. Again, if you guys have chart requests, drop them in the chat. If you enjoy the content, make sure to smash the like button, and let's get right on with the show, guys. Okay. So we will begin, of course, with Bitcoin as we are wont to do. Nothing significant here on the weekly time frame. Again, we've just simply pointed out that accumulation zone between the point of control down to this lower shelf. This is exactly where price turned around. And while I do not like the structure on the 4-day time frame, again, we do take the calculated risk of a long trade off of this position. Essentially, the trade setup can go by many names, but we've seen a bottom formation in Bitcoin. We have established a new low. We've seen a little bit of a relief rally here, and now prices come down. We are forming a higher low. So we are going to play this as a secondary rally. We are going to be looking for higher price targets in the sense of 30,000 essentially is where we would like price to go coming off of this bottom. As I've said before, should we slip and lose this shelf on a significant closing basis, we will be establishing momentum short positions. Why, you might ask? Because avoiding this, and I really need to start using the new draw feature so I don't have to delete all these things. There we go. I simply have this draw feature. All right, the reason why is because avoiding this, ladies and gentlemen, is more important than catching this. And once your mind shifts into preserving the capital that you do have, instead of trying to grow the capital that you don't have, you will begin to see different results in your trading. So we will be establishing and hedging our risk should we lose this. And again, we're already hedging risk. Again, my official portfolio recommendation right here is for your BTC and Ethereum allocations, 25% of what you'd like to own in totality can be purchased at these price levels. Anything more, you're going to be suffering significant drawdown if and when we collapse down below these price levels and descend down to our lower valuation models, which I'll get into here briefly. So not too much to write home to mom about here on the weekly time frame. We did, of course, recover the moving average for the relative strength index. We are tilting back up because we do have a green close currently, and nominal volume remains relatively high. Again, that's probably the most important metric of why I consider this a buy area right now, or why the risk to reward is to the buy side, is because of this extremely high volume. Extremely high volume is very important. It comes in at the beginning of trends, it comes in at the end of trends. And whichever one that is right here would be a very welcome sight to see for many of the bullahs. All right, down to the daily time frame. Again, a little bit more granularity here. As you can see, we have consistently been establishing higher lows, even though in this micro trend, we are forming lower lows and lower highs. As you can see, if we really zoom out in this consolidation and accumulation area, we are consistently forming higher lows. So if this holds and we do establish this higher low, this will be a very good sign to see. It will mean that this area did act as a very good and strong support, that buyers who are positioned here are willing to hold their positions here. And again, this goes back to some of the information that we're going to see when we look at the on-chain data. Long-term holders, long-term investors in Bitcoin are not moving their coins. They're not moving their coins onto exchanges. They're not moving their coins on chain. They are not spending their Bitcoins. These are long-term holders, individuals who have held their coins for more than 5 months. And once you do that, you become a cohort that is the least likely to spend your coins. Short-term traders, though, individuals who have held their Bitcoins for less than 30 days, absolutely dominate all spent coins right now. And we can see that those short-term traders are utilizing any and all possibilities of exit liquidity to get out of their positions at cost basis, not at profit, at cost basis. We'll go over all this when we get to Glassnode here in a little bit. Again, RSI recently tapping oversold levels here on Bitcoin on the daily time frame. So again, with an explosion in nominal volume, setting up a nice juicy area here for a reversal in trend and a trade to the upside here. 4-hour time frame is not super constructive here. We have that same thing. If you guys will recall, look at this area of the market right here. And I talked about this at length last week. Okay. Remember how I said we have this nice market structure right here. And if you want to know when you should take a long or a short out of here, the short particularly, watch how the RSI remains above the RSI moving average for this entire area, remains above it. There's volatility, price moves up, price moves down, but no big extreme swings in price, no overbought, no oversold. But once that moving average breaks back down below, or excuse me, once the RSI breaks down below the moving average, what happens? We have a bearish trend and a beautiful 4-hour short trade. We have the same thing right now. Look how the RSI is remaining above the RSI moving average on the 4-hour time frame in this consolidation area. And if you're watching for when to look for that short, potentially when RSI goes below the moving average would be a good signal. Other than that, if you're just looking for a breakout long trade here, you have the same metrics as always. Wait for price to break above these areas and you go to the moon. All right. 30-minute time frame. Can we see what's going on in the market with a little bit more granularity? Let's get Quadriga off there. We're going to be using VWAP and session volume here. All right. So naked points of control. The only naked point of control we have is up here at 21,412. That's an area of liquidity of intense interest by traders. That's where the most volume by price was transacted during that session. These areas tend to act as magnets for price. So that's the only area here that's untouched. You can see here as a magnet, price drawn back down to this point of control. We tested it and we've consolidated these higher points of control. Nothing really below us that we need to sweep. In my estimation, of course, we can, of course, trade lower, but there are no significant reasons why we would need to from a technical perspective or why market makers would want to push us down here. We've already tapped this liquidity. We've already been positioned and things are good. All right. Let's look at open interest and funding here. As we can see, funding has continued to spike. Let's just give this a quick refresh. This is coming from CoinGlass. Okay. As we can see, funding is on the rise. Funding rates for, this is Binance BTC USDT, which we use as the bull weather for the market. But we can see that funding is on the rise over the course of this consolidation area, indicating that more individuals are putting on longs. We can see that in this area here, open interest did completely get crushed. Cumulative volume delta would suggest that those were shorts closing out and not longs taking profit on their positions, which means, again, this perspective would tell us that there is potentially more upside in a way. So good to see. And now getting over to some of those on-chain metrics. Do we have the on-chain recovery that we want to see? Can we be confident in purchasing Bitcoin at these price levels? Unfortunately, the reality is no. We will begin our journey here with our valuation model for Bitcoin, looking at where we believe the bottom price in Bitcoin can be. As you can see, this model has held up very well. Let's actually go back to the last 5 years. This model has worked very well over the last 5 years, multiple metrics catching different segments of the bottoms. Here's the bottom being catched in 2018 by Delta price. Here's the bottom being caught in 2020, March 2019 during the March meltdown. 2020, actually, March 19th, 2020, the March meltdown when COVID first came onto the scene with the realized price of Bitcoin. And where do we currently sit right now? Let's just zoom in a little bit more. And we can see that Bitcoin is currently trading underneath its realized price, above the balance price and above the delta price. All right. So we've already marked this out. Where is the bottom side downside target for Bitcoin? Currently, this metric does keep changing and fluctuating every day. We are descending a little bit lower. Today, that metric sits at $13,583.64, rounded up to the closest penny. Our balanced price is sitting at $17,031.67. So again, potentially an area of interest for Bitcoin to stop on its descent down to that delta. Of course, we can stop here. We are in the vicinity of the 200 weekly simple moving average. This has historically been a bottom area for Bitcoin. Realized price has historically been a bottom valuation model metric for Bitcoin. But we don't have what we need to see here. Let's go back to my dashboard. And we're going to see a lot more here. Of course, new address momentum. We want to see the 30-day moving average of new addresses be greater than the 365-day moving average. This is indicating that there is new activity on chain, new wallets are opening up, and that indicates that new retail and new money is coming into the markets. We absolutely do not see that here. Let's actually zoom in. Let's just zoom in over the past 3 years so we can see here clearly. The red line is the 30-day moving average, and the blue line is the 365-day moving average, and we have descended back down below. So we are unable, and this has been the case since April 2021. New activity on the Bitcoin blockchain has been unable to keep pace with older activity. So we're just not seeing that influx. We are in a macro decline of interest in new addresses and new market participants, and you need all that. You need new market participants. You need new money. You need new capital to come in to trigger and initiate a new bull run. So this metric currently remains bearish. It has not recovered. We've gone all over all these in the previous streams. Our exchange flow multiple, we'll just simply note this one I think in particular is important. This is the net realized profit and loss of Bitcoin traders right now. Now this is the 90-day moving average, which I like to use to get a good picture of the overall market recovery, like the macro market recovery. And if we zoom in here, get a more granular view, you guys can see that we are in general, we are dominantly individuals who are spending their coins right now are locking in historic losses. They are locking in historic losses right now. So the closer this metric is to zero, that indicates that when individuals sell their coins, they're on average in profit or at average break even. So you guys can obviously see, and it makes intuitive sense that when traders are in a lot of profit, in a bull market, traders are locking in a lot of profit, and in bear markets, traders are locking in a lot of losses. So we are still locking in a lot of losses. What's interesting to note with this indicator is that we seem potentially to have peaked and reached a low right here on this recent dump and the current local bottom for Bitcoin's price. And this metric is climbing, has climbed back up. However, we are descending back down again. So this metric will not catch this early recovery, as you guys can see here. For example, let's go back to 2020. This is the March meltdown in 2020. This metric did not flip green until that initial recovery was over. But as you can see, that recovery of that metric indicated the future bull run to come. And so we're looking for that same thing here. So I would like to see this metric creeping back up. So it currently remains bearish. We do not have the recovery and investors that we would want to see. Now, I want to share a few new charts with you guys, because of course we've gone over all this before. But today what I'd like to do is I'd like to look at some metrics actually established by ARK Invest. So this one's going to be average coin dormancy. All right. So this is an interesting metric because it tracks the age of coins that are moved on chain. All right, so if we zoom in here over the last 3 years, we can see that we have been a macro decline since January of 2021. This is actually quite constructive. This is a good sign, because what this indicates is that older coins are not moving on chain. All right. As this metric moves down, it indicates that shorter term coins that have just recently been minted or created, brought into existence through the block reward, are the coins that are getting spent. Meanwhile, older coins are perfectly content to remain dormant. Again, this is a positive signal. It's a positive signal kind of, but it's also a negative signal. If we were in a bull market, or if prices were moving up, then this would indicate that older coins are staying dormant, and that would give strength to the bull market, because if hodlers who have been holding for years aren't selling yet, then you're probably good to continue holding as well. When this metric begins to decline, as you guys can see here, as you guys can see, this metric is rising as the bull run kind of is ensue, and this is older coins taking profit. And you can see when this metric turns around, this, ironically enough, they missed the top, But again, nobody's perfect. As you guys, this chart clearly shows that long-term holders aren't catching the tops. They stopped selling on this peak. You guys can see this absolute cliff, like it falls off a cliff. This metric falls off a cliff. And that is when older coins stop moving around on chain. So at this point, essentially, the trend of older coins moving on chain and getting spent in profit stopped. And all of a sudden, newer coins are the coins that were spent and moved around on chain. And then you can see that this macro decline, older coins have remained dormant, continue to remain dormant. So again, in a bull market, this would be very constructive. As it is right now, with the fact that prices are declining and it's newer coins that are being spent, it means that price is struggling to hold the line, even though older coins aren't being spent. So prices are getting hammered, and it's not even like old school whales that are selling, right? What this tells us is that the current demand for Bitcoin is just evaporating, right? There is barely enough demand to just hold price where it is, okay? Let alone enough demand to drive prices higher currently at the moment. So very important chart, a very important metric. All right, we'll look at another one from ARK Invest. This is actually Coin Years Destroyed. So this is interesting. Coin Years Destroyed shows us when older coins are moved. Okay, so if a coin is sat in a wallet for several years and then that coin moves, this metric evaluates that as 2 years being destroyed. So coin years destroyed. So what's interesting about this is that we can see historic lows. We can see this metric reach its peaks at the tops of bull markets. Okay, meaning that older coins that have been sitting for a long time are moving around as long-term holders take profits during market rallies. And what this shows us is that during bear markets, older coins sit tight. Older coins sit tight because investors don't want to sell into a bear market. They're going to wait for the next rally. So I think this is interesting because you guys can see the low that this metric put in back in 2020. Okay, this is late stage bear market. Early stage bull, we reach these low levels on the indicator. So like late stage bear market, early stage bull, we reach these low levels on the coin years destroyed metric. And we're currently in this bearish trend on the coin years destroyed, this macro decline. This is exactly what we would expect to see during a bear market. And we are reaching those historically low levels that we've put in here during the last 2020 cycle. Now, interesting to note too, the lows logarithmically do seem to grow. We do have this kind of deviation where in 2019, we put in a higher low, and then in 2020, we put in a lower low. But if we look at 2015 to 2019, and so anyways, the assumption here could be that we could actually form a higher low here, and we would be in line with what we saw from here to here. Unfortunately, I guess we could also see what we saw here from 2019 to 2020, where we actually put in a lower low. So not necessarily related to price, but just letting you guys see kind of what the hodler behavior is and the activity of individuals who hold coins for a longer period of time than you. All right, the last two charts we're going to look at are going to be our net realized profit and loss. We did look at this earlier, but we were looking at the 90-day moving average, and I want to look at the 7-day moving average so that we can see just what kind of losses we are locking in the Bitcoin community right now. So right now, if I just go to, I'll just go to 1 month so we can zoom in right here. We can see that on a daily basis, Bitcoin holders who are selling at these prices are locking in about $210 million, $210 million worth of losses per day on average. So that is what the average investor who is distributing here is locking in as a realized loss, negative $220 million. So while this is obviously not anything to sneeze at, it's really nothing compared to what we've seen in the past. Back in, obviously, we saw multi-billion-dollar drawdowns in the past with this metric. So what this is just telling us is that as far as the pain points for Bitcoin investors, it is certainly receded while we are still certainly locking in losses and not in bullish territory or doing really well at all. the pain has subsided. The pain has subsided, and the damage wrought by this bear market is on par with previous bear markets as well. So again, this is a little open-ended. You can take this to mean that the pain is almost over, but also we have to remember that there could be significantly more pain in store. The last metric that we're going to look at as well is going to be our entity adjusted SOPR. This is spent output profit ratio. And this is very useful. So spent output profit ratio just evaluates what the price of a coin was when it was first received into a wallet and the price of Bitcoin when that coin next moves. All right. So we assume that when a coin moves on the blockchain, that is equivalent to sending it or spending it. So if a coin was received in a wallet at $100, and then it is moved out of that wallet at $1,000, well, that's a 10x, and that would be significant. That would be a positive value on the ASOPR. This is averaging all the coins on the blockchain. So as you guys can see, highly elevated levels of ASOPR indicate that coins are being moved in significant profit, and is generally an indication that the top is near. Meanwhile, significantly negative values in SOPR means that coins are being moved on the blockchain at a significantly lower price than they were originally received into that wallet, generally indicating reliable bottoms. Meanwhile, an ASOPR rating of 1, so when we're right here at the baseline, this indicates that individuals are moving coins at the same price, roughly, that they received them. And so when we see significant on-chain activity with individuals moving coins at the same price that they received them, this is generally quite negative, and this works differently in bull and bear markets. So if we look closely at this bull market right here, so this is the rally beginning in March 2020 and really lasting until March 28th, 2021, before that summer 2021 50% collapse. As you guys can see, ASOPR in a bull market oscillates between 1, and then as prices move up, spikes up as individuals take advantage of selling into rallies. And then this kind of acts as a pullback indicator. When we're in a bull market and ASOPR pulls back to 1, this means that coins are moving essentially at their cost basis, and investors will often take advantage of this to increase their position at their cost basis level. So as we can see here, ASOPR pulls back to 1, prices pulled back, and what happens? Prices pushes up, ASOPR pulls back down closer to 1. This is a pullback, and investors take advantage of that to buy more at their buy-in level. So we can see this after this big spike right here, ASOPR chunks all the way down here to 1.02, very close to 1, and we get another rally. Okay, so this is a very good pullback indication. Now, in a bear market, when we are testing ASOPR, or excuse me, when we're testing 1 from below, then this tells a different story. When we see ASOPR rise to 1 from below and then reject, what that indicates is that investors used that bear market rally and took advantage of the exit liquidity, not to lock in profits per se, but to get out of their positions at their cost basis. And this is quite negative because it just indicates that short-term traders are taking any and all opportunities to get out of their positions, not at profit, at break even. And look at this last one, this last test right here, and we'll zoom in just the last 3 months. This is very depressing, right? All right, so ASOPR is in negative territory, okay? And we come up, we rally up, we test, oh, we're breaking up, Bitcoin at 24,000, and we test ASOPR of 1, and we immediately reject, go back for a double test and reject. That indicates that Bitcoin holders or short-term traders took advantage of the exit liquidity to not sell at a profit, to sell at break even, to get out at break even, right? And if that's the state of the demand, guys, we need significantly more demand if we're going to push up. Okay. Excuse me. All right. So I cover all this and more in my newsletter. I just published this morning. This is Bitcoin pumps from demand, but is it enough? This was going to be the title of the stream, but I scheduled the stream for yesterday and didn't get a chance to do it. But you know. Breaking Bitcoin market update. So you guys can see I go over all the majors. I will, of course, I'm actually going to do it right now. There we go. I just dropped the link to this market analysis in the description. So if you refresh the stream on YouTube, you guys will be able to click on that. Please, I highly appreciate it. But I'm going to go over a lot here today. So I go over basically everything and more that I went over today, as well as the explanation of these metrics, exactly how they work. Here, we're going to go over altcoins of interest, strong and oversold. So this metric I track on a daily basis based on the activity of MVRV scores, placing these coins in oversold territory. But they also have strong on-chain demand and network activity, generally indicative of accumulation. The number one coin today was Dogecoin, followed by Hex, then Uniswap, ApeCoin, Decentraland, the Sandbox, Quant, Stepin, Trust Wallet Token, and Gala. So these tokens do warrant further review. I highly recommend you guys go check these out with your own analysis and see if they fit into your risk profile. Again, these are short-term positions. We are seeing demand for these coins, and they are in historically low price areas based on their MVRV scores. Similarly, we also track altcoins to avoid or to sell if you do hold them. This is based on the metric of large inflows to exchanges. And specifically, just so you understand the quantities of the metrics that I'm tracking, 300% or more increase in exchange inflow is what we're watching for here. So number one, Uniswap, Chainlink, OKB, Nexo, 1inch, Machine Exchange Coin, Liquidity USD, Scale Network, DAO Maker, and SSV Network. All right. And then finally, my real screener, and I'm going to go over these charts with you, is altcoins of interest that have strong activity. And here I track altcoins that can be bought or sold. It depends on where these metrics come in relative to price. But what I'm looking for is significant upticks of on-chain and exchange volume and a significant uptick of daily active addresses on-chain. So here we have Machine Exchange Coin, Brain Trust, MX Token, ADX, Solve, League of Kingdoms Arena, Numbers Protocol, OAX, Razor Network, and Unification. All right, so I'll go through these one by one. Here we have, this is going to be Machine Exchange Coin. Here you guys can see very clearly, note this absolute spike in daily active addresses. This is the orange columns in the background. Big spike in daily active addresses. And what happens next? Nice pump. Nice pump. Now, this is a sell to me. Why? Because as you guys can see, daily active addresses is actually declining now, and we need to see daily active addresses continue to increase with a price rally so that there is fresh money flowing into the market, into that coin. When daily active addresses are declining and price is pumping, it indicates that there's less on-chain demand, and then investors are likely selling. Also, we have this big spike in volume, which is a huge no-no to me. So definitely MXC, Machine Exchange Coin here, is going to be a sell. Here we go. Let's get out of that. Oh, sorry, I have to click the button. I wrote here, notable accumulation is seen here with the spike in daily active addresses. However, this coin is just pumped and is experiencing a large influx of exchange volume at a local high. This is likely a sell signal. You guys can see the same thing here with Brain Trust. Look, price is, well, this is not the greatest example. See, we have these spikes in daily active address. This is a good one right here. But, again, Brain Trust just pumped during the pump, that's when we have the spike in daily active addresses, plus an explosion in volume, plus an explosion in transaction volume. That's a definite sell signal. It's a huge no-no. And so I only have a few more minutes of the stream. I apologize, guys. But I just want to go down to what I actually thought was a few coins that actually looked enticing. And this is going to be the League of Kingdoms Arena. Here we go. We see that price is actually in a downtrend here. We're at lows. And we see this uptick in daily active addresses, a spike in transaction volume, and a spike in exchange volume. So this is definitely an interesting one to keep your eyes on. Potential pump incoming for League of Kingdoms Arena. And then finally, we had, what was the other one? Okay, I don't have the chart for it here, but it's MX token and numbers, the numbers cryptocurrency. Also, again, notable mentions here, Dogecoin, Hex, Ape, and Mana might be worth taking a closer look at if we do have some price climbing moving into the future. Due to the fact that they are oversold and they're experiencing strong on-chain demand right now. All right, guys, that's pretty much, unfortunately, that's all the time I have for today. Again, no more streams for 4 days. No more streams for you. I will be taking a 4-day vacation. And then we'll be getting right back into it, guys. I want to be doing a stream every week next week. Again, the premium onboarding content, or excuse me, the premium onboarding course is now complete and available on the website. We will be making some modifications to the automated signal service here relatively soon. But the numbers from that continue to remain impressive. So all the premium members still have access to our automated strategies trading 24/7. And the next module we'll be uploading to the website for our course content is of course going to be our risk management. I do want to give a huge shout out to Brian B, Damian Hughes, Ron Legato, Tom Hardy, Kimo Zabi, Mr. Ether, Robert Warner, Alex81 SG, Rob and Pow Donahue, Aaron Webb, Bob the Builder, Alex1233, Verk, Gravy Grits and Green, as always, joining the stream, Cisco Kid, Freeman's Cryptoverse, and we have somebody relatively new, Achilles Katana. Thank you so much for joining me, guys, for the stream. Highly appreciate it. One moment, we'll go to the outro. All right, guys, as always, if you enjoy the content, if you like what you've seen today, make sure to smash the like button. It helps out with the YouTube algo, lets us know you like the content, and inspires us to continue making this educational material. Also, subscribe if you haven't. You can also support us on Twitch or DLive with a follow or subscription. Always generous, always appreciated. We really do like that. Link to the blog post for today's market analysis is down in the down in the description below. And while I did not get a chance to cover our users' comments, I usually take some time earlier in the stream to go over a comment on the YouTube channel. So if you guys would like your comment featured on the stream and allow me to take the time to really answer it with some detail, leave your comments down there below after the stream. We do, of course, offer automated strategies, our online trading academy, our premium indicator suite, our risk management material, and mentoring. All of our professional services you can inquire about in the link in the description down below, or you can visit our website, krakencryptocurrency.com. Until next time, guys, remember that risk management and emotional discipline are number 1 and number 2 when it comes to trading. Profit is an afterthought. And it's going to be a 4-day, it's going to be like a 4-day weekend for me, guys. So in light of that, make sure to really take some time this week, guys. I mean, these are tough times in the market, so I want you guys to stay together. Don't get disbanded. Reach out to the people that you love. This is like the times of highest strife are the times of highest opportunity. And if you just kind of step out of what may appear to be this kind of bubble of shit that you're in, you guys will realize all the opportunity that you might potentially be missing out on. All right, guys. Until next time, trade safely. I'll see you in the next one. Cheers.